All right, so Aurik Capital is a completely separate business to Aurik, a business accelerator. It's a business that we established after 12 long years of me trying to work with banks. What we've typically found with our clients and with the businesses we're working with, as we go through the process of orientating the business towards growth and building out a growth path and plan for the business, we noticed that we would go to our clients' banks with our clients to support the fundraising requirement. If you build a business right, you can build it only to a level wherein which you will need funding to support beyond what I would refer to as pedestrian or beyond organic growth. It's the nature of growth. Growth does consume and eat money. It burns money as much as it generates money. So the work that we would typically do with our clients is we work with our clients to optimize their business. And that means you're using the money in the business to support the growth of the business to a point, after which, if you want to grow faster, harder, quicker, longer, you do need to get some additional capital into the business. And Iqbal, you know what amazed me? We work with our clients and we see the potential, we see the growth because we build a dashboard, which Charles is very familiar with. And we can see where the businesses come from and we can see where the business is going to. And yet the bank itself gets grumpy around funding their own clients that they've known for 10, 20, 30 years longer than we have. And in the beginning, I used to get all outraged by this, only to learn and realize that banks have massive limitations. And through no fault of theirs or ours, they are governed by prudential requirements and all sorts of governance and compliance issues and regulatory issues that enable them to only fund certain things, like a vehicle, okay, or an asset. But when you grow a business properly, you should be able to have the assets you have. And mostly, a lot of that growth needs to be orientated across three things. And that's going to be marketing, which Charles knows about because he does a lot of work in that space. Marketing, who wants to fund marketing? A bank can't fund marketing. A bank can't fund people. As you grow a business and you grow your capacity and your capacity to deliver, you need people. And then finally, technology, increasingly. A bank won't fund technology. Charles, if I acquire some of the technology you offer and I go to a bank to raise a loan to acquire it, the bank's not going to lend me the money for it because it's not a tangible asset in their view. So banks are really good at providing debt, and debt has a very useful place in a business that's in steady state. But if you're growing a business and you're growing a business effectively, you're growing it hard, you're growing it long, debt also means that when you raise it immediately, the very next month, you have to make payments against it. And here's the thing, you're raising the debt in order to grow the business, and you're going to be spending that money in growth, investing the money into your growth. The growth that you generate, you want to maintain in order to self-fund yourself, in order to limit the funding you need to raise to grow the business. It's logical, right? So there are certain times and places where bank debt is useful, but mostly in growing businesses, it really doesn't help much. So we went out and we raised a fund. And a couple of years ago, Section 12J legislation came about, and effectively SARS turned around and said to private individuals, hey, listen, we'll give you an opportunity to invest in businesses, and for that, we'll give you a tax break. So John, if you were to invest in a Section 12J fund, which is what Aurik Capital is, and you put R1 million into the fund for the year, SARS will turn around and say, you would have paid 450,000 rands worth of tax on that income. What we'll do is we'll give it to you as a break. You won't have to pay the 450,000 rand tax because you've invested the full $1 million into the fund. And through that, you're supporting the growth of what SARS calls us. You're supporting the growth of SMEs in the country. SMEs in turn generate jobs, SMEs generate taxes. And this provision in the tax legislation is what led to the United Kingdom becoming the startup center of the whole of Europe. They introduced provisions like this 12, 13 years ago. These provisions don't exist right across Europe. And guys, you know what's so interesting? What it did is it attracted the best, the brightest, and the most driven people out of Europe, out of Spain, out of Italy, out of Greece, out of Germany, out of Holland, out of Portugal. And they all went and located themselves in the UK because they could get access to startup funding, which wasn't available in Europe. So it was a great strategy, which they've just gone and blown out the water now because of Brexit. But we are very, very keen to amplify the strategy through South Africa, because if we could attract the best and brightest out of the rest of Africa into Africa, because we have startup funding available or established SME funding available, it would be awesome for the country. So we offer this to Aurik clients that are working with us in Aurik Business. Charles is an example of a business working with us in Aurik Business. I'll talk a little bit to what we do over there. And we provide the funding to support more or less three things. A growth plan. So in other words, it's not recovery funding or rescue funding. It's funding that supports the momentum of growth already apparent in the business. So Derek, if your business is growing at, let's say, 10 to 15% a year, and let's call that organic growth, then if you want to then lift the growth to 30, 40% a year, and there's a growth plan to demonstrate that this is completely viable, that growth plan is what we would fund. The growth plan needs to be activated and driven, and I'll talk to how we demonstrate that. And it's really, the funding is fuel. It's growth fuel more than anything else. That's the proposition that we put forward to individuals who have gone and capitalized the fund. So we have a number of people, private people, who went and threw money into this fund. They believed in what the fund is going to do. And most importantly, they believed in established mid-tier SMEs. They recognize that people like us, all of us on screen, have our wealth creation opportunity invested in the business. I'm guessing, John, I don't know you at all, but I'm guessing that if you don't drive the business you've got, the chances of you getting a job at McKinsey as a consultant, neatly shaven in a suit, saying, yes, sir, no, sir, or yes, ma'am, no, ma'am, Raquel, I can see you nodding your head, is unlikely. All of us over here rely intimately in the performance and success of our business. And when I sold that idea to investors, they got excited, because the fact of the matter is that you invest in people before you invest in the business. And Grant, if everything you have and all your future relies on your business doing well, there's an extremely powerful motivation to make it work and make it happen. And that's what separates us, I think, from all the other funds out there. That's how I positioned ourselves to investors. So the funding itself, we can invest anywhere between 1 and 7 million rands into a business. The funding is equity funding. So it's not debt funding. It's not funding that you ultimately pay back on a monthly basis through a principal amount with interest over a 3-year period or a 5-year period. It's equity funding. In effect, what we do is we acquire a portion of the business for a period of time, and the value of that portion of the business, anywhere between 1 and 7 million rand for a minority stake, so anything up from about 10% to 35, 40%, would then be used not to go on holiday, but would be applied to implement and activate and support the growth program that you have positioned for growth funding. The application is growth momentum, not potential. Potential needs to be shown. You know, the early stages of potential need to be demonstrated. We don't go through a process where you go and provide a 78-page business plan. I got shown the other day on a Zoom session. Can you imagine? And I am looking for a little bit of pity and empathy here. A 98-slide business plan. And I had to sit through this thing. And it was all about potential. And I'm sure you all recognize in your own selves, as I do myself, all of us right now are billionaires on Excel. So this funding isn't Excel funding. It's not a spreadsheet funding. It's where you have growth momentum in play and you saying, hey, Pavlo, we're in a situation where we're growing and our growth is being held back. And I can demonstrate it because I need to increase marketing spend in that region over there. Or I need to increase my stock count. Or I need an additional piece of plant or equipment. Or there's a great opportunity for me to acquire a smaller competitor. We're sitting in a situation now where one of our first probable funding rounds will go into a business that manufactures steel drums. And they have reached absolute capacity in their plant. They manufacture the big 200-liter drums. And what they're looking to do is acquire a competitor who's long in the tooth, who's tired, who's fed up, who's just had it. And they have the ability to then manufacture, I think it's about 5 other shapes and volumes of drums. So immediately what that does is it puts them into the consumer market. It introduces them into a market where they can start selling to the paint manufacturers, et cetera, et cetera, et cetera. They cannot do that without additional funding. It's a 23-year-old business. It's established. It's got a second generation of family in it. So all the features are there. All the characteristics are there. Everything they have as a family is tied into the business. The strategy makes sense. They've worked with us for about a year so far. Every growth target they set for themselves, they've achieved. And that makes an ideal instance where we can very efficiently and very effectively fund without the requirement of 98 slides to demonstrate the validity of the funding request. What we are seeing and what we believe will happen is that next year, as we start arriving back to some level of normality, the vaccines will start coming into the country, I think probably already during March. It's likely we'll get the AstraZeneca vaccine. It doesn't require complicated logistics. It's got a 90% efficacy. A South African investment firm has part funded it, and we've had 30,000 South Africans trialing it. So the relationship's in place, and it's likely that that vaccine will come into play. And as it does, I think it'll be washed across the country in the very, very late part of the first quarter through to the second quarter. And by June, we would have attained some level of normality, but accepting it won't be normality as we understood it before. A lot of businesses we're working with have started to create interesting mixes of remote working with their teams. They are questioning the validity of their offices to a large degree. They have digitized extensively over the last year, massively. So things have changed. And what we are finding already is businesses that we were working with during the COVID lockdown this year, because of the work we did with them and because of the pressure we create in our relationship with you as a growth partner, a lot of businesses reset and rebuilt themselves to be relevant. I think you're going to find yourselves next year in an economy with 20 to 30% fewer competitors, and a lot of those competitors that remain would not have prepared business models and cost models that give them an advantage. So we see next year a lot of our clients acquiring smaller businesses or taking away customers and clients from competing businesses that aren't well prepared. And the funding is available for that. According to the Section 12J requirements, we have to invest for a period of no less than 5 years. And what SARS argued is if it is SME-based funding. SMEs take time to mature, they take time to grow, they take time to become saleable or exitable. SMEs also, in their growth period, offer the greatest return in terms of job creation and tax revenues to SARS. So they said to all the private individuals who invested in the fund, put your money in, but it needs to remain in play for 5 years. If we're giving you that big tax break, we want that money of yours to be working in the economy and supporting businesses. So we typically would look to invest grant today with the view to exit from the 5th year onward. And the reason we need to exit is because the money is not ours, it belongs to investors. And investors effectively have bought a product. The product they bought is Aurik Capital, and the promise of the product says, hey, listen, put some money in to Aurik Capital. We will, from an Aurik point of view, invest it wisely and sensibly according to the mandate. And then we will return it to you with a return and profit for the risk you've taken after the 5th year. So if you put R1 million into the business, hopefully after 5 years, that same equity that the R1 million bought will be a high number for the same equity that gets sold back to you as the business owner, or alternatively, if you choose to exit the business as a whole, gets liquidated when the buyer acquires 100% of the equity in the business. Okay. The investment criteria again, we can only invest in Aurik clients, and I'll explain the reasons why in my next slide. With annual revenues typically around 10, 12 million upwards. Just to give you a sense, the Aurik clients typically are doing from about 12 million. Our largest client, which is Charles Parrington on the screen, does 1.3 billion a year. Well, almost, Charles, we're on our way there. So we're not quite there yet, but we're on our way over there. And it's a range right across that. We can't invest in certain businesses. So all of you who are involved in firearm manufacture, adult content generation, liquor, the liquor industry, I don't think we're allowed to invest in. If you own a hotel, we were allowed to invest in you before, but we're no longer allowed to invest in you. And if you're a pure financial services business, we can't invest in you. And those restrictions were determined by SARS themselves. They've got good reasons for it. It really doesn't apply to most of us on screen. And we can't invest in distressed businesses. So we can work with you if you're taking pain at the moment, but we first have to get the business orientated to growth, stabilized, working and earning growth before the funding can come through. It's a good thing that, incidentally, it's a good thing that, if I personally reflect on my history and I look at the businesses that underpin the establishment of Aurik, in every instances, when we started those businesses, John, I sucked out every ounce of investment from them. I made them investment. I starved them of investment deliberately, because when you have little, you build smart and you build cautiously, you build tight, you build very, very efficiently. And if any businesses are in distress, in not all cases, but in most cases, you can get out of distress without funding if you simply build smartly. And once you have, and once you're on an even keel again, then you're working with an extremely efficient platform. And any growth you get typically comes down to your EBITDA numbers or your profit numbers. There are terms and conditions, of course. The way that we would work with you if you applied for funding and you go through the funding process, we establish a term sheet. A term sheet's a single document that says, okay, Derek, so we're going to put 3 million rand in. We're acquiring 22% of the equity based on your valuation. And we're going to provide it to you in 3 tranches over a 9-month period upon the achievement of ABC. And then after 5 years, we're going to look to exit it. and we will sign a memorandum of agreement around it. That's what a term sheet effectively says. Obviously, you need to be tax compliant as a business, because in each of these instances, we have to, on a 6-monthly basis, report the performance of the fund to SARS. SARS have granted us the tax break, not us, but investors a tax break. We're part of the Financial Services Board, so we need to be tax compliant, we need to be governance compliant. There's an enormous amount of regulation and compliance around these funds. And we pass a little bit of that on to you, not much. Investment return dynamics. The way that I've argued to investors, we will get a return, is I'm saying we're working with clients that we know. We have come to know Charles from the very first instant he started to work with us. And we've come to know Charles on 2 bases. In the first instance, we've come to understand and know the business. We went through a process, quite an extensive process, in order to get a good sense of the business itself, to put a growth plan in place that suits the ambitions that Charles has over the next 3 to 5 years. We looked at the implementation of that growth plan. We've come to know Charles as an individual and his team. And because of that, we know our clients. We have a good sense of our clients. And investors love that idea, that beyond just looking at a great business, we're looking at a great team. And we can evaluate and comment on both the team and the business itself. The next thing is we work with you to attain that growth through an Aurik instance. So not through Aurik Capital necessarily, but through Aurik Business. Derek, if we set growth ambitions, once we have gone through a process where we've looked at the business and we've done diagnostics, I'll talk to them a little bit later, and we've set the growth plan, we then customize the activation of that growth plan with you. And we have around 6 to 7 individuals who work with you to attain that growth over a period of time. And we're very, very focused on growth. We really are a growth service more than anything else. And then we measure performance. And we measure performance through data on a dashboard that we customize around your business. And we can see what's working, we can see what's not, and that helps us identify an intervention into what's not working and to amplify what is working. How do we exit? Because this is something we would do together. So we're sitting in a situation where, Warren, we've invested in your business alongside with you. We agreed that we would give you 5 million Rand based on your valuation. Over 5 years, we have grown the business to 3-4 times its size, let's say. And we need to get out. By law, we have to get out. Because the investors are saying, thank you very much. We want to now get our money back and we want to get our return. There are 2 ways of doing it. We either look at together exiting the entire business, or we look to sell our shares back to you in a share buyback. And these are transactions that most people are not familiar with because we seldom get exposed to them in the world of SME. The way that you exit a business is either going to be by a sell to a corporate entity. We see that as a very viable path over the next 5 years. I think that South African corporates are going to struggle for growth. And through that, they're going to be making acquisitions of SMEs to get that growth on board. It's a nice, neat way to exit if the deals are done right. I don't know all of you on screen, but some of you might be looking at saying, hey, I want to list on the Johannesburg Stock Exchange. It would be a next tier of growth, and it's where you want to take a 70, 80, 90, 150 million Rand business and build it up to R1 billion a year of revenues. Or you might be looking for a private buyer. Iqbal, I knock on the door and I say, I want to buy all your interests in the automotive industry. But the problem is, I need to be a hefty buyer because there are very few people who can put their hands in their pockets and haul out 10, 20, 30 million Rand to acquire your business tomorrow. So, you know, the private buyer option is a difficult option. Alternatively, in a buyback of shares, Grant, you might turn around and say, hey, listen, Pavlo, I've decided that I'm going to let my team buy your shares from you. So you can sell to my team, and as a result of that, my management team will become shareholders in my business alongside with me, because my plan is 5 years from now to sell my shares back to that team as my exit strategy. And guys, these conversations become important and very, very useful, because we need to start with the end in mind always. As much as you love what you do and believe in what you do, there are only two destinations for every business in the world. Absolute fact, absolute truth. And that's either a sale, an exit, or closure. 94.6% of businesses started fail to sell, their close. I'm referring to us, all of us on the screen. 5% of us here will succeed in an exit, and the balance will close statistically. And I know it doesn't feel that way for most of us. And with respect, Grant, you look 16. We're all jealous of you. But the younger you are, the more bulletproof you believe you are. A lot of those businesses that failed to sell were once young. And then all of a sudden they realize they're 10, 15, 20 years in, and a business that has provided really good income is not a business that was built to be sellable. So we have a long conversation around the exit side, because it matters to obviously the investors we represent, but it also matters deeply to you. The opportunity working with Aurik is when we engage with you to customize a growth plan. So should we do work together, the first thing we do is we run a series of diagnostics on the business. They're comprehensive diagnostics. It's across your strategy, it's across your numbers, it's across your team, and it's across the business itself. From there, we set growth goals. And then from there, we create a customized program of growth, which gets implemented to first create scale in the business, in other words, an ability to deliver, and thereafter enjoys the benefit of that growth. Once that's in play, 6 months into the growth plan, based on your dashboard that we developed for you, the opportunity to secure funding becomes apparent. We now know what your business stands for in the marketplace. We know who you are tackling and who you are serving as clients and customers. We have a sense of how you're going to be generating new customers, marketing, the rate of how you are onboarding new customers, which is sales, and your capacity to service them. And from there, growth becomes very evident. And the moment you have those, let's call it cogs in place, the ability to generate new customers, close deals with your customers, and deliver to your customers, you would surely want to fuel that engine. Because if that's in play, that's where growth and next level growth really becomes apparent. And then at the end of 5 to 7 years, at least from an Aurik Capital point of view, they are required to exit. We are required to exit at that point in time. So to give you a quick sense in terms of process, if this is of interest to you, we will be sending you something afterwards. The opportunity to apply for the growth funding is there. Really what that opportunity is it's a couple of questions on the business so we can prepare for our next engagement. It'll take you 10 minutes to complete, which is the provisional engagement. And the provisional engagement will see one of our team members come engage with you to get a sense about the business, to see if we can make a difference to the business, to see if we can add value to the business, to get a sense of where you want to go over the next 3 to 5 years. And if you're not entirely sure, to help you clarify that, to get a sense of what it would take to get there. And if we felt that we could be of value to you in that process and we could make a difference to you in that process, we would then typically offer you a proposal to engage. With the engagement proposal in play and activated, we hold on, I think, three times a year funding workshops for all our clients. And our client, so let's say we're working with you, Derek. You'd say, okay, I'm ready for funding. I'm going to go to the workshop itself so I can be in control of my valuation. I'm going to understand how valuation works. I'm going to do a valuation of my business. and I'm going to prepare an investment case, which I will then pitch to a separate Investcom body. An Investcom is an investment committee, and the investment committee look at your business differently. And you're going to be a bit patient with them because there's some really dry, uninteresting people on it, like accountants and statisticians and engineers. And what are the numbers people called again who work for insurance companies? Actuaries. Yeah, actuaries, that's what they are. Because all they are interested in is risk. All we are interested in is opportunity. So the tone is very, very different over here. They're representing private individuals who are investors. We are representing opportunity realization into the future in working with you. It's a very interesting dynamic. And if we get to a place where they say, yes, we are in, the funding is provided, agreements are put in place, and disbursements take effect. So in summary, there are three parties involved here. There's Aurik Business, which works with you to achieve one thing only, and it's independent of Aurik Capital. It works with you to build your business into what we call an asset of value. A business that is driven by your brand and not you, nor your relationships, nor your fantastic personality, John, or charming good looks, or connections, or relationships, Iqbal. It's driven by a brand, and the brand is your business. It's driven by systems, all the activities that generate leads, convert leads, and then fulfill your promise to leads. Leads is a polite way of, well, it's a technical term for clients and customers, the stuff that makes a business happen. It's a business where you have a purposeful team, the right people doing the right thing at the right time most of the time. Most of the time. The single biggest challenge. Yesterday we had an event in the evening, and there were about, I don't know, 60, 70 people in the room. And I asked all the business owners, what's your biggest challenge? What percent do you think said people? Besides 80% of them, people are the biggest challenge. There really is a way to get people right. I promise you, it's a two-way street. And you can't get it right if you don't have a system of delivery, and you can't have a system of delivery if you don't know what your business does. The product and service you offer is not what your business does. It does other things. Through that, that gives you the growth. And through that, we work with you then to increase turnover and limit your cost overhead so that we can grow the profitability of the business, because that's where the valuations effectively apply. If you increase your turnover and your costs increase in parallel to the turnover, you're not increasing the value of your business. You're certainly increasing complexity and risk, but not the value. So we work with you to get that right. And during the course of this engagement with you, should you require funding, on your dashboard, there's a button that says Fund My Growth. You click on that button, and that button invites you then to do a valuation on your business and present the business to an independent investment committee that sits in Aurik Capital. And with that, I hope I explained myself clearly and coherently.